Raghuram Rajan corporatises the Reserve Bank's annual report, adds a governor's statement, says reining in inflation and NPAs is a work in progress, seeks better compensation and higher pensions for the Reserve Bank staff.
The RBI wants the government to front-load its divestment plans, says India is prepared with enough forex reserves for a Fed rate hike. Also says the next challenge for the RBI is to ensure the rate cuts are transmitted.
The US economy grew at a faster than expected 3.7% in the second quarter of the year. Wall Street rallies as central bankers across the world gather for the three-day summit at Jackson Hole. A CNBC survey shows the Fed could delay the rate hikes to December.
Global markets rebound as stocks in Shanghai post their biggest one-day gain in 2 months. The Wall Street rallies on expiry day. Sensex reclaims 26,000, but it has lost over 5% in the August series, the worst in 2 years.
We finished last year with 7.3% growth rate. We'll probably finish this year with a slightly better growth rate than that. And next year, hopefully, will be a little better.
As China falters, India can take the lead, says Finance Minister Arun Jaitley in an interview to the BBC, but also admits the need for more reforms and says infrastructure is still a far cry from the ideal.
Government announces 98 cities as nominees for the Smart Cities project. Uttar Pradesh leads the list, followed by Tamil Nadu and Maharashtra. But only the top 20 will get funding this year. State capitals like Kolkata, Patna and Bengaluru missed the cut.
This is the time for all parties. I also appeal to Congress party and other parties that in the national interest, as early as possible, we should approve the bill of GST.
Cabinet Minister Nitin Gadkari says the special parliament session will be pointless if the Congress refuses to play ball on the GST. Also says the centre is working on mitigating all risks for the land ordinance once it lapses. That's a CNBC TV 18 exclusive.
From when I taken a charge as a minister, before March, I want to complete the target of 3 lakh crores.
In a bid to ramp up road infrastructure, Gadkari hikes his own targets, hopes to award highway projects worth 3 lakh crore rupees by this fiscal, plans to award 20 projects under the new hybrid model.
Gas prices are set to get cheaper by nearly $1. A sharp fall in US prices may push prices in India to just about $4 a unit. The oil ministry is divided on revising the formula to calculate the price. That's a CNBC TV 18 exclusive.
New airlines could be allowed to fly overseas from day one. Sources say the new aviation policy may give leeway to new airlines, but only if they commit to connect remote domestic destinations. That's another exclusive.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
It's been a historic, significant evening for Indian space research in more ways than one. India's GSLV program received a massive shot in the arm thanks to the successful launching of GSLV D6 from the ISRO facility right here in Sriharikota. Remember, the GSAT-6 is expected to boost spectrum coverage as far as remote areas are concerned. So what we are essentially seeing is defense and government applications which will receive a massive upside and a shot in the arm, especially as far as remote areas like jungles are concerned. So this means better communication, better satellites, more advanced satellites, and certainly better communication modules as the Indian space program carries on into the future.
Well, yet another spectacular launch by the ISRO. The GSAT-6 communication satellite has been successfully put into orbit. This is the 9th flight of the GSLV and the 3rd using our indigenous cryogenic engine. Prime Minister Modi has lauded the scientists for making the country proud once again. Good evening. Thanks very much for joining us on India Business Hour. Hi, Nandara.
Well, Shireen, there was another rocket that we saw being launched.
Usain Bolt.
The human rocket. He won the 200 meters World Championships in Beijing today. That's, of course, after winning the 100-meter sprint. on Sunday. So that's the latest as far as the other rocket goes.
Well, it's not just Bolt who's making news in China. Stocks in Shanghai have also recovered, and all of that is coming up for you in just a bit. But first is day's trading action on Dalal Street. A strong close to what has been a shambolic series. The market's rallying on expiry day thanks to strong global cues and some short covering. So the Nifty up over 150 points, moving closer to the 8,000 mark. The Sensex rallied over 500 points, reclaiming the 26,000 mark. But make no mistake, the August series has been nothing short of disastrous. In fact, in absolute terms, the markets have seen their worst fall in 2 years, with the Sensex dropping nearly 1,500 points. Anuj is standing by now to wrap up the day's trading action. Anuj, some respite for the bulls today, but otherwise an almost nightmarish August series.
Yes, some respite for the bulls after the kind of carnage that we have seen all through the August series. In fact, from the high of the August series of 8,600 to the low, the Nifty went down nearly 800, 900 points, and that really was a big carnage. Today, of course, some stability came back in the market. Overnight, the US markets looked good, and Asia had a good start, and that led to big gains in our markets, of course, helped by short covering and some bargain buying as well in names like HDFC and a couple of others like Infosys that supported the market. So let's talk about the stocks then. Stock of the day, and by quite some distance actually, was HDFC, single-handedly contributing 40 points to the Nifty today. That stock was up 8%, still ended in the red for the series. Tells you the kind of series that we have had. ITC was up 2.5%, and Reliance was up about 2%. Some other prominent gainers then included some of the commodity names like KN, that was up 7%, Vedanta up 7% as well, and Tata Steel was up about 5%. There were some other winners as well. In fact, it was a bit broad-based. So stocks like Ambuja, Larsen & Toubro, Bharti Airtel were all up between 2 to 6% in today's trade. On the losing side, BHEL was the one big loser, not just for today, but also for the series. That stock was down quite a bit in trade, along with Bajaj Auto and NTPC. In the mid-cap basket, big gainers. In the actually non-index large-cap basket, we had stocks like Bata, Godrej, Motherson Sumi, all of them up 8%. Not just that, some other stocks like Titan, M&M Financials, and Crompton Greaves, they were other big winners in trade today, up between 5 to 7%. So that's the day. It was quite good, but then the series was quite bad. And the problem for this market now is that it seems such a brutal correction that it would require not just a day like today, but 3 or 4 more calm days to say that the worst is over. So we'll be watching out for September series with quite a bit of interest.
Nifty back above 7,900, Sensex back above 26,000. But like Anuj was saying, we have seen a very sharp correction. Thanks for joining us with that analysis. The turmoil in the world markets this week has raised concerns about the strength of the world's emerging market economies. But one potential bright spot is India. The International Monetary Fund predicts it could soon be the world's third largest economy. As part of its India Rising Day, BBC World News spoke to Finance Minister Arun Jaitley earlier in the day. BBC's business editor Kamal Ahmed asked the Finance Minister about the country's reforms momentum going forward. This is what the Finance Minister had to say.
Now, the government has been functioning in an environment where globally, at least, the environment is not very supportive at the moment. Notwithstanding the constraints, Prime Minister Modi's government, almost by the day, is continuing to move and reform in the right direction. And slowly but surely, the results of which are also showing. In an environment there is a relative global slowdown, India seems to be doing reasonably well. We finished last year with 7.3% growth rate. We'll probably finish this year with a slightly better growth rate than that. And next year, hopefully, will be a little better.
Well, that's the Finance Minister reiterating the message that India continues to be a bright spot. Our fundamental picture looks good, and we will pass through this volatile time holding our head high. But the Reserve Bank has released its annual report, and for the first time it has come with an overview from the Governor himself. Latha and Ritu standing by to take us through the highlights. Latha, before we get to the highlights with Ritu, let's talk about the Governor's comments. This is unprecedented. It's the first time that the report has come with comments or an overview from the Governor himself.
Yes, that's right. Much like a letter from the chairman to shareholders, this is the first time the RBI annual report has almost a letter from Raghuram Rajan, the governor, to the nation, as it were. It just surveys the year that was and what RBI and Raghuram Rajan have achieved. Come to think of it, he completes 2 years on September 4th, and this is a very good analysis of his own effort perhaps in the last 2 years. Well, the key things he focuses on: inflation control, one of the key things RBI focused on, still work in progress, some progress achieved. Next area, NPA reining in is a big effort for the Reserve Bank. All through the year, they created that CRILIC, which is a central database of all loan accounts above 5 crore, a very valuable addition this year, which enabled banks to understand how much each borrower is exposed to each bank and how much he's totally indebted. Valuable database, reference to that, and then creation of a joint lender forum every time a loan interest was not paid for 1 month or for 2 months, so that you can set right quickly. A survey of those measures. A PSU bank reform is the next area he focuses on. Much has been said on that. A fourth area is creation of a short-term yield curve by not giving lazy money to the banks every day at the repo window, but asking them to bid in an auction so that they become disciplined. And a fifth area, which is, I think, the most important addition of Raghuram Rajan, on financial inclusion. The government, of course, the Jan Dhan is the government achievement, but laying the last mile to the Jan Dhan accounts through the payments bank is what the report says the Reserve Bank has been focused on. But the most unexpected element was a very strong comment from the Reserve Bank governor that RBI needs to be paid better and they need a better pension. He speaks about professionalizing the staff itself, but this never seen a public plea by the governor that his staff needs to be paid better. Overview of the economy, Ritu?
Well, to begin with, yes, India's economic outlook, according to RBI, that is improving, but right now monsoons remain a matter of concern. We need to watch out how they progress, really, is what the RBI says, to see their real impact on inflation. So right now, for the last few months, yes, inflation has been inching downwards, but going forward from here on, that is expected to inch upwards to reach about the 6% level by January 2016. The government's fiscal target consolidation measures have been really good, and the RBI says that the government may be able to rein in fiscal deficit at the 3.9% target for this fiscal. But one area where it's lacked is divestment, and more front-loaded actions, says the Reserve Bank of India, need to be taken by the government to really make use of this opportunity. The Fed rate hike, which is something that all the markets are watching out for. So on that front, the Reserve Bank of India says, yes, there will be an impact. We'll see capital outflows from all emerging markets. But what is important is that India has forex reserves of over $350 billion, and that will help buffer the economy when the Fed hikes its rates eventually in the December quarter. And before I wrap up, one more important thing that the RBI says it will focus on is better transmission of its rate cuts by the banks going forward. So far, they've only transmitted about 30 to 40 basis points of the collective 75 basis point rate cut that the RBI has undertaken. And now going forward, the RBI will focus on banks adopting the marginal cost of funding so that they are able to transmit any cut in deposit rates into the lending rates more efficiently and faster.
All right, Latha and Ritu, thanks very much. That's the highlights of the fine print of the RBI's annual report. And of course, you can catch Raghuram Rajan right here on CNBC TV 18 from Jackson Hole in the US as central bankers gather to understand where policy should be headed. Now, China may be faltering and its impact may be felt across the globe, but the world's largest economy is clearly showing signs of an improvement. The second reading of the quarter just gone by shows that the US economy has actually grown more than what the initial estimate was. The Q2 GDP number has come in at 3.7%, which is a jump of more than 1% when compared to the first estimate of just 2.3%. This on the back of strong domestic demand, and Wall Street is infused by those numbers, with the Dow gaining more than 200 points, while both the S&P and the Nasdaq have gained more than 1% each in trade. But another reason why Wall Street is probably moving higher is because central bankers from around the world are gearing up for a 3-day annual summit at Jackson Hole in the US, with China throwing global markets into a tailspin. Many now believe that the US Fed will delay its rate hikes, and the president of the New York Fed, William Dudley, says the case to hike rates in September is now less compelling. CNBC's Steve Leesman reports from Jackson Hole on what we can expect from the summit.
As central bankers from around the world ready to meet in the shadows of the majestic Teton Mountains in Jackson Hole, markets look more like this after 5 days of extreme volatility. That's led a leading Fed official today to suggest the odds of a September rate hike from the Fed are eroding.
From my perspective, at this moment, the decision to begin the normalization process at the September FOMC meeting seems less compelling to me than it was a few weeks ago, but normalization could become more compelling by the time of the meeting as we get additional information on how the U.S. economy is performing.
Dudley, who along with Fed Chair Janet Yellen is not coming to Jackson Hole, said Chinese economic weakness, the strength of the dollar, and recent market gyrations all combined to make the chance of a hike less likely in September. But he wouldn't rule it out since it's still 3 weeks until the next meeting and lots of data to come.
A lot can happen between now and then. We'll be very sensitive to what happens to the employment numbers a week from this coming Friday, and it looks like you're probably going to get another decline in the unemployment rate.
A new CNBC Fed survey finds that Wall Street economists now expect a later first Fed rate hike than they did previously, moving the expectation to December from September. But nearly 40% of the 26 surveyed still see the chance of a September hike. The irony is that U.S. data has been reasonably strong recently. Just today, the government reported that business investment in July rose the most in a year. But the Fed is cautious about recent developments.
The slowdown in China and the sharp fall in commodity prices are increasing the strains on many emerging market economies, and this could lead to a slower global growth rate and less demand for U.S. goods and services.
Some thought the Federal Reserve in Jackson Hole would go for a hike in the mountains, solidifying the case for that first rate hike. But it now looks more likely that the message from Jackson Hole is that the Federal Reserve, at least for now, is on hold. Steve Leisman, CNBC Business News, Jackson Hole, Wyoming.
In fact, we've got the first hint that perhaps we will not see a September rate hike once the FOMC minutes had come out. After 7 days of panic, calm returned to markets in China. The Shanghai Composite ended the day 5% higher, making it the biggest one-day jump since the 9th of July. The rally was driven by reports that Beijing will take new steps to prop up the markets. But does the turnaround in trade signal a turnaround in sentiment? Eunice Yoon filed this report from Beijing earlier today on why investors continue to remain on tenterhooks.
We're definitely seeing a big recovery in the Chinese markets, but at the same time, there's still quite a bit of fragility among investor sentiment, within investor sentiment. Right now, we're seeing the government really coming to the markets to try to prop it up with traditional as well as non-traditional methods. After the market closed yesterday, the Chinese Central Bank injected $22 billion of liquidity into the banking system, but at the same time, earlier in the day, the government had announced some more unorthodox methods, such as restricting the index futures trading, also saying that they're going to step up efforts to investigate illegal trading, insider trading, as well as rumor mongering. Now, this scattershot approach is just a continuation of what we've seen over the past couple of weeks, and it's really unnerving a lot of investors here. Today on social media, there were most of the comments were a little skeptical about this rally, saying that yes, the market's up, but it's probably just going to drop over the next couple of days. And what we're seeing here as well is the government in PR overdrive. The Chinese state media has been full of editorials trying to convince people that there are many alarmist voices in the West. The People's Daily, which is one of the top newspapers today, had an editorial saying that China is displaying rare courage to push ahead with economic reforms, and that outsiders don't fully understand this. The Global Times, another Communist Party paper, had also said that outsiders don't understand the fact that China's economy is actually doing quite well. There's another an article written in Xinhua, which is the official state news agency, which pointed to a researcher at the Chinese Central Bank who they had quoted as saying that the problems and the global market turmoil isn't so much because of the devaluation of the currency here, but mainly because of the expectations of a change in policy at the U.S. Federal Reserve.
Well, the Chinese government trying hard to allay concerns and bring back confidence as far as the markets are concerned. Eunice Yoon there reporting from Shanghai. Now, the cheers fed onto the European markets as well, with both Asian and American markets posting sharp gains in trade today. Markets in Europe slipping on Wednesday after a roller coaster session in Asia kept investors on the edge. But today, look at that, gain of 3.5% apiece there for the European markets. Back home, as the government's smart city plan rolls forward, the centre today released the much-awaited list of 98 smart city nominees nominees. Uttar Pradesh has managed to bag the maximum of 13 nominations. Tamil Nadu finished second at 12 and Maharashtra got the third position with 10 cities being selected. But this is just the beginning of what may turn out to be a tough intercity competition. Shweta Katari has the details.
Prime Minister Narendra Modi's ambitious smart city project is finally to take shape. The central government today released the list of 98 smart city candidates which have been shortlisted after the first selection round. Uttar Pradesh has highest number of nominations with 13 cities making the cut, including Kanpur, Allahabad and Varanasi. Tamil Nadu comes a close second with 12 cities which includes Chennai, Coimbatore and Madurai. Greater Mumbai, Navi Mumbai, Pune and Nagpur have made it to the list from Maharashtra, and Ahmedabad, Gandhinagar and Baroda are among the cities chosen from Gujarat. With the Prime Minister laying special emphasis on development of northeastern states, Guwahati, Kohima, Imphal, Aizawl, Shillong and Agartala have also successfully bagged a position on the coveted list.
Aspirants have been chosen through an intra-state competition. Each state and union territory has evaluated all the urban local bodies in their respective states and union territories based on the existing service levels, financial, institutional capabilities, fast track record, reforms carried so far, and nominated the top scorers.
While most states have found representation on the list, 9 prominent cities including Delhi, Patna, Bangalore, Kolkata, Thiruvananthapuram and Shimla lost out in the City Challenge competition.
In one sense, the inclusion goes to prove that selection in the first stage of competition was not swayed by the status or importance of cities, and the selection was objective as per the stipulated criteria.
In the second stage of the Smart City competition, which kicks off now, the government will release 2 crore rupees each for 98 Smart City nominees, so they can draw up a Smart City plan. These plans will be evaluated by the centre, and the top 20 ranking cities will be funded by the government in the current financial year.
The central government has pledged a total funding of 48,000 crore rupees over the course of next 5 years. A special purpose vehicle will then be used to implement smart city plans in states and union territories. So while the smart city plan has finally kicked off, there is no indication as to when India will see its first smart city. In New Delhi, Shweta Kothari.
Joining us now to discuss the government smart city roadmap are Arindam Guha, Senior Director, Deloitte India, and Devendra Kumar Pant, Chief Economist, India Ratings and Research. Gentlemen, appreciate you joining us. Let me start by asking you, Arindam, about what you made of the shortlist, the 98 cities that have made it to the first shortlist. The inclusions are perhaps okay, but as far as the exclusions are concerned, Bangalore doesn't make the cut, Delhi doesn't make the cut, Patna doesn't make the cut. Are you surprised by that?
Well, I think the selection has been made based on criteria which were announced earlier. There were 13 criteria in all, and as the Honourable Minister explained, it had criteria like percentage of revenue generated from internal sources, whether the annual accounts of the city were updated on time, and there were various other criteria which were all objective in nature. So I guess, the selection of cities, since it was based on these criteria, it was quite expected, especially all the more so because the list of recommendations came from the states themselves.
Okay, so let's go to Devendra now. What are you likely to expect as far as the smart city plan that now these cities are going to put forward? What would you like to see? Because one would imagine that the kind of funding that the government has put forward is clearly seed funding. It's not going to be enough for these cities to be able to sustain their smart city plans. So both in terms of sustainable revenue generation, governance models, changing the sort of urban governance model, what is it that you would like to see being incorporated in the plans that are going to be put forward?
Well, to make this project successful, what we have to see is a sustained program or a credible program whereby the SPVs will be floated, how they will be able to raise money and fund the infrastructure. Mainly when we are talking about roughly around 13 crore of the population in these 98 cities, and we have a very poor performance whenever the question of user charges is concerned. So how the user charges will be levied. So give you an example, these cities put together will require daily requirement of something around 17,000 million liters of water. Now the piped water supply to these households and the user charges which covers the cost of provision of these services. Unless these measures are not taken, the user charges are not levied, then the quality of the urban services which will be offered are going to suffer. Now, if we are not able to provide make smart city a livable city, so when we talk about livable city, each household should be provided per capita at least 135 liters of water. 80% of that is converted into sewerage, whether we have the sewage treatment plant so that the sewage is treated, whether we have the roads. Say for example, if we take a very conservative estimate of 400 grams of municipal solid waste is generated, then these cities will generate something around 20 million tons of solid waste. Now, how those solid waste is treated. So these are some issues which each city has to provide the answer to these, and I believe the part 2 of this selection process will deal about these issues.
Okay, Arindam, if I could just come to you. You know, smart cities around the world have a CEO. Do you think we're going to follow that model in India? And the second part, and this is where India Ratings also comes in, SEBI has allowed municipalities to actually issue bonds which can be listed on the stock exchanges. Do you think that is something that is also going to happen in the country? Is it going to be successful? Because firms like yours will come in and actually have to rate all of those bonds.
Right. No, I think, on the first issue of whether there will be a CEO, I think the smart city scheme itself says that there will be a special purpose vehicle which will, take on board all the financing available, and it will be responsible for designing and implementing the smart city projects, number one. And it will also be tasked with operating the various projects which are implemented, and even collecting revenues. Now, in terms of actual implementation on the ground, I think I see a challenge there, because in our constitutional framework, a number of functions have been by the constitution itself, they have been delegated to the lowest tier of government, which are the urban local bodies themselves. Now, when we have a separate SPV operating or delivering some of these functions, there could be conflicts which will need to be resolved through a proper governance mechanism. Now, coming to the point on rating of urban local bodies, I think various states have gone for different options. There are at least 4 or 5 states which have set up urban infrastructure development corporations, which are essentially vehicles for pooling of finances. They are supposed to collect finances or mobilize resources from various sources, and these resources can then be used across urban local bodies for financing different projects. So I guess there will be various innovative mechanisms which will be there, because as Devendra was explaining, if you look at ratings of ULB themselves, there would be a handful of urban local bodies which would really be able to muster ratings which can help them mobilize external resources.
Devendra, you want to come in on that point and add to it?
Yeah, see, under JNNURM, the program which runs till FY12, the 65 of the municipal corporations or the urban local bodies were rated. Few of them were got a really good credit rating. When we are saying good credit rating, they were in the AA category. The whole idea behind JNNURM was like these municipalities will go and hit the bond market and raise money from the bond market to finance their infrastructure projects. But unfortunately, none of them has hit the bond market. Coming to the pooled finance, which was referred, see, as of now, only the two states it is functioning. Tamil Nadu has been doing it from 2002. Karnataka has been doing it. So basically what happens is whenever a ULB, and why they are not able to hit the bond market, because there are number of disclosures, the account has to be maintained, the audited account has to be to be done quickly. Every quarter the reporting has to be the stock exchanges if those bonds are listed and traded. Unless these issues are resolved, and in some ULBs under JNNURM they were able to do some reforms in this direction. But look, there is NDMC area in Delhi, which is one of the selected city for the smart city.
Sure.
You know, I know, we know what kind of problem and issues citizen face. Selection is one thing, but really implementation is the key. How they will be able to raise finances, how they will be able to improve governance. And main issue is if they are able to raise finances, whether the charges or user charges which are levied for these services, whether they will be sufficient to pay that for debt servicing.
Absolutely.
If the debt servicing is not done timely, then there's the issue.
Well, and execution is going to be key as far as the success of the Smart City mission is concerned. But on that note, we are going to have to wrap up India Business Hour. Remember to stay tuned to CNBC TV 18. We'll get you all the action from the global markets and, of course, our markets right here.